Okay, good afternoon and welcome guys. Welcome to our Dollars for Lunch session, our New York Stock Exchange Open. Just welcome to everybody that is in the house with us. Welcome Keegan, welcome Iviwe. Welcome to our session. We're going to be having a ton of fun this afternoon. Markets are a little bit slower than what we normally used to. In past weeks, we've seen massive moves, massive opportunities. And again, we have to remember the interest rate announcement that was essentially heard last week has put markets in a space of indecision, right? We're going to go through and start off as always with a little bit of the news as to what it is we're seeing in the world and how we're going to potentially deal with this from a trading perspective. So we are going to jump in and have a look at what the data has to tell us. I think up first, let's just jump straight in and have a look at what the world is talking about and where we're going to potentially find opportunities this afternoon in these markets. Now, we obviously have to deal with these markets a little bit differently to how we would traditionally deal with them, and that is mostly from the reason, the perspective that markets are sitting in the state of imbalance, right? So we're going to have a look at what opportunities we can find. We're going to have to really pull these opportunities out of the charts and get into it and dive a little bit deeper. So we're going to start off with the news, and I'm going to skip the local front completely because honestly, there's not a lot happening on the local front. Still talks about ESCOM, still talks just general politics as you would have it. However, I want to focus on this article that comes from Yahoo Finance in terms of analysts are saying that this bear market that we're currently seeing will continue well into the second quarter of next year. They're citing the first quarter. However, if you read deeper, they're saying at least into Q2 of 2023, we could continue to see this bear market across the board. And obviously, we want to have a look at what does that look like from a price action perspective. And I will share this link in the article directly into the Globex 360 traders group. We will jump into that. But outside of that, there's nothing much happening outside of the economic data that we got this afternoon. And the economic data really focused around this GDP data for Q2 came in as expected, a negative 0.6% decline in the gross domestic product for the dollar, as well as initial jobless claims actually came out better than expected. They were expecting around about 215,000 people to file for employment, and there's only about 193,000 people filing for employment. Now, the difficulty with these reports, specifically the jobless claims, is that is only the people that filed for unemployment, right? We're sitting also in a cycle where people just couldn't be bothered, right? They deactivate completely from the jobs market, and that doesn't take them into account, only those who've applied for unemployment benefits. Government can be tracked and monitored. So this initial jobless claims is a weekly claim and doesn't have as big of an effect on the market. We really look for that NFP, non-farm payrolls, at the first Friday of every month to really look at what does that labor market look like in the US, how strong, how weak, average hourly earnings, etc. So this is just a little snapshot into what that may or may not look like. All right, now jumping into the markets, which is what we are all here for, we're going to transition into what we are busy looking at this afternoon. We're going to start with the dollar, but we need to obviously understand we are definitely looking at a slower week in relation to our past couple of weeks, right? The first 2 weeks of this month, the markets were flying. We were pretty much profiting in every session that we had because we had that normal volatility in the direction of the markets that we expect to see on a normal ongoing basis. So we do need to account for that, and we do need to adjust for that accordingly. So we're going to jump straight in. We're going to have a look at what's happening on the dollar, and then we're going to move into indices as we have the next 10 minutes for New York Stock Exchange market open. So without further ado, let's have a look at what it is we're jumping into. So let's stay tuned to our charts. First and foremost, before we jump into that, just obviously a massive welcome to the chat. Everybody that's with us, Heavily Defended, Kudzai, Lizzo, Samir, welcome guys, Renisha, Sherman, VDW, what is happening? All right, so we're going to jump in and have a look, and we're going to start as always with the dollar index. Not much has changed in relation to what we were seeing this morning. We did get a little bit of that dollar weakness as we are expecting. Something is up, and how do we deal with that? How do we change that? And how do we look for opportunities in our outlook moving forward, right? So dollar index up first. we aren't seeing much of a move from this morning. We are seeing the dollar decline off of those highs that we obviously saw. We obviously smashed resistance, and that is looking at it from a weekly time frame. We can see that dollar is obviously into a little bit of resistance zone here, trading at that 112 level. Again, I still hold my sentiment regardless of what analysts are saying, regardless of what the sentimental opinion view of the markets are, but the dollar is trading way too high. Now, the one item that hasn't been taken into account, and you guys are going to see this, is really being underreported when you look at different places around the world, is the Russia-Ukraine issue, right? Tensions are busy sort of rising. Russia has announced that they're going to be annexing 4 territories from Ukraine, and essentially it's a fancy word of saying they're taking over those territories. They're declaring that those territories no longer belong to Ukraine and now belong to Russia. We also have the Nord Stream pipeline that has been damaged, and essentially Russia is claiming that this is a anti-militant group. Essentially it's sabotage, right? So things are ramping up there, and we're not seeing a lot of Western news reporting on that. And we are hearing that a lot of countries are asking for their citizens, please, to get out of the area, as well as bordering countries essentially blocking essential access from Russians who are trying to flee and get away from these areas. So that is obviously something we have to pay attention to the back of our mind. This can get quite serious. This can escalate quite quickly, but we don't have data yet to interpret where that could go and what that can do. So until something happens, we need to obviously pay attention to it, keep it in the back of our minds. And obviously in a time like this, risk management is going to be key, right? For those of you who remember trading the Swiss franc a while ago, a couple of years ago, we saw that massive move on the Swiss franc, right? It moved so fast. There was market halts, market opens, and ultimately resulting those who are in the wrong side of that trade, right, get blown out. So please pay attention to that, obviously, as well. This can, escalate at any point. This could happen 1 a.m., 2 a.m., 3 a.m. in the morning, and you would only know by the time you wake up. So it's just something you want to keep at the back of your mind, specifically when there are these global tensions that we need to pay a little bit more attention to. Looking at Euro USD, as per our analysis this morning, we suspected that Euro USD could be sitting on support, and we might start to see some sort of pullback on the euro dollar. Now, we are seeing that euro is gaining a little bit of momentum and retracing slightly, however, still insignificant in relation to, passing that dollar parity that we've obviously seen Euro USD break through. Now, USD ZAR is going to be an interesting one, and I feel will continue to remain a topic for discussion, specifically over the next coming days, because we're sitting at this crucial level, right? We're sitting right in that 78.6. We've been speaking about it for the last couple of days, but we did not get that weaker dollar data to support a long move. Obviously, we understand and we know we are in a bull market structure, and we obviously would like to see that price take off from the 78.6 for a long and potentially reaching 1820, 1830 to the dollar coming over the course of the next week. So for those of you that are monitoring this, you'd like to watch it, make sure you're looking at a 4-hour time frame and simply just draw out a parallel structure here. Utilize your Fibonacci tool, and all you want to literally do on Fibonacci is look at that 1920 to the dollar high of the 5th of April, I believe it is 2020, and look at that absolute low sitting on the 6th of June 2021. So looking at that full year's data, we are observing that pullback to the 78.6. Essentially, markets are really slowing down on USD ZAR towards this top side, right? We're not getting nice swift moves, and so markets again are captured by indecision, right? No matter where it is you look, outside of some certain areas like Euro GBP where we got that massive volatility, markets are really slowing down and absorbing the data that's coming from the US. And also subsequently, other markets are doing the exact same thing, right? We're seeing interest rates being increased across the board, and it clearly seems like markets don't know how to interpret this data in terms of moving forward. So when that is the case, we need to start looking for opportunities on a closer time frame and just looking for the pure price action data and what we can do to take advantage of that. Now, really quickly, looking at indices, we are going to be covering that in a little bit more detail. But in terms of where we currently sit, right, this morning, we were looking at breaching that 6-month low at the 29,700 on US30, and we have made a retracement off of that breach, right? We did not break through resistance there, and we've essentially bounced off of resistance. Now, what I'm looking for this afternoon, because we clearly have a state in structure, we had this massive bear market, most clearly identifiable just by looking at the 15-minute and drawing a diagonal across there. But even if we go ahead and we start to have a look at markets like that, right, and we really start to take an approach of really looking at absolute resistance, we can even in that case see that we are in a new state when it comes to US30. And that is what gives me hope for a long and still the potential for that 29,700 break, right? This one has really been a market, I'd say, target that has eluded us in the past couple of days, but I do definitely think we have opportunity to move to the top side. So in the next 4 minutes when the New York Stock Exchange opens, we will look at that, but please also bear in mind, as we identified yesterday, we're seeing a lot of really good structural reversals and movements happening at that 20 past, 5:30 mark. So for those of you who enjoy New York Stock Exchange and you're not seeing that momentum that we've seen in the past couple of weeks, then definitely keep an eye on structure around that 20 past and 5:30 mark. Now, moving into next week, we're going to be start to send live trade opportunities, right? So as market structures are breaking, instead of simply saying, guys, please observe the market, I hope you watched today's video, we'll actually send out that market structure. And that'll only be for Globex clients who have a live account with a minimum of $100 in that account. So you don't want to miss that if you want to catch those opportunities live next week with us. So we will jump into indices a little bit deeper in the next couple minutes, but quickly just giving an eye on the commodity space and specifically looking at gold. We can obviously see we've got that punch through in that breakout. And again, gold is the only one of the instruments across the board that is telling me that we could start to see some sort of normality in the markets. Now, the last item that gold has to overcome, right, is ultimately staying above these resistance levels, right? This last set of resistance is ultimately what gold has to overcome. We seem like we're staying above it. We could even go as far as to saying that was the actual resistance level. And ultimately, we need gold to maintain this level to expect some sort of continuation to the top side. We obviously have this, what is this, the 15th of this month. We currently sat for around about a full trading week on support, and that is exactly what we're attempting to bust through at this point in time. So should we pass through that floor of resistance, which is now resistance once was support, gold could give us an early indication that we could start to see markets go back into normal structures and give us some of those better opportunities moving forward. Now, we are about a minute and a half away from looking at the New York Stock Exchange open. And as always, we're going to deal with this. We're not going to change strategy. We will adapt strategy slightly for the next week. Should we continue to see the same movements today as well as tomorrow in terms of a fairly flat ranging market for indices on New York Stock Exchange open. But then if we see that at 5:15, we get those breakouts, we will adjust the live broadcast for next week to anticipate and obviously be live when those markets happen, right? That's the times I enjoy trading the most, is when we have that volatility to really ride out these long 2, 3, 4, 5,000 pip ranges. That's when it's most exciting and most fun. And I know you guys enjoy that quite substantially as well together. Okay, so moving into it and having a look at what we're going to be dealing with this afternoon, we're essentially looking at US30 on my left-hand side, otherwise known as the Dow Jones. Dead center, we have the NASDAQ. And then on the right-hand side, we have another US30, which should be German 30. There we go. All right. Now, in essence, again, we're going to be focusing on US30 this afternoon. So I'm going to open this up and explain what it is that I've looked at in the past couple of hours. And just to give you guys a little bit of a bigger view as to what's happening, we touched on it very shortly, but I just want you guys to really just see this and absorb this, right? So this level here that I'm just expanding, right? This is our 6-month low that we attempted to bust through. Now, I'm looking for alternative support, alternative resistances that we can potentially use in order to trade. So what I'm doing here is I'm measuring out this last impulse because we have a break-in structure, break-in bear market, when you have a break, you have a new standard within the market. You have a new direction, if you will. And so what we're doing here is we're looking at that new impulse to the top side, and we're utilizing Fibonacci to try and give us some sort of scaffolding, some sort of market structure / support. And the push that we had yesterday afternoon, right? Remember I said, watch out for that 5:30 break. We got the 5:30 break. We rallied up about 4,000 or 5,000 pips. And now we're in this pullback. The pullback is sitting on the 50. Now 50 is a very, it's a very slight pullback. I'd like to see a deeper than 50 move, but ultimately, we're going to look at New York Stock Exchange Open, which is happening right now. And what do we get towards the top side? Now, just a quick zoom out. We also have this diagonal resistance here. We're sitting on that 38.2. We've pushed down to the 50. And what I would like to see this afternoon for a potential buy opportunity is I would like to see us breach, right? Not only this diagonal resistance, but again, I'd like us to punch through that 23.6 resistance, right? Inversely and oppositely, for a sell, right? I'm looking at this whole zone here as a dead man zone, right? Meaning I don't see much trade opportunity between the 38.2 and the 50 for a short, right? If we break the 50, I'll be looking for a short. We break the 23.6, I'll be looking for a long. So I'm basically considering this whole zone dead until we get a move, right? Now, normally when markets are moving in a normal fashion, meaning there is no issues in the market, we're seeing markets move in a fairly predictable trajectory, I would have no issue trading that specific zone. However, in a market that we're seeing in the past week, where we're seeing lots of ranges, there's nothing worse than getting caught in a range, right? Selling and then markets go up. You try and catch a buy, markets go down. And so those ranges, those choppy markets tend to pretty much hold you in a loss for zero reason, right? When there could be other opportunities to be looked at. Now, looking back over the past couple of months, I went and had a look at when have we had weeks that are very similar to this, because it doesn't happen very often, right? And the last time we had a trading week and a half that looked something like this was probably about 4 months ago. So it definitely seems seasonal. It definitely seems like we have a cycle that we obviously have to anticipate, where we start to see markets range and just not acting in a fashion that is conducive to, immediate or breakout trading. So the start of the New York Stock Exchange, we are seeing that push down. US 30 is giving us a nice strong candle towards the downside. And then, we're seeing NASDAQ hold out. We're seeing German 30 hold out. Now, we've seen this before. We've seen this over the past couple of days. That initial spike doesn't always hold. So what we're looking for is at least the first 1 or 2 or 3, or first couple, I'd say the first 3 1-minute candles to do what they've got to do, and then a decision to be made. But if you guys remember, and for those of you who've been with me for a while, when we look at these New York Stock Exchange breakouts, we're generally looking for a minimum of 1,500 to 3,000 pips for a move, right? And what we're seeing more recently is these 500-600 pip candles that ultimately don't go anywhere and just move into a range. So what we will do today is essentially we will hold our look and we'll essentially stay live together for the next 7 to 8 minutes and see if we break out of structure. And if we don't, right, there's no point sitting and watching it for another 2 hours. We then look specifically at the 5:15, 5:30 mark, as we've seen happen almost on a daily basis. Now, I suspect that we could potentially see, if we don't see activity now in the next 5 to 10 minutes, then what we would then be looking for is a 5:15 break, either as downside or upside above the 23.6. Now, again, if we see a north side break, so we see a positive move on the US 30, that would be something I would be really excited to get in long with, for the reason being that we're in a new state of market. Now, on a 15 minutes, it is observable that we are currently sitting under that 500 period moving average. Now, this represents 500 15-minute candles, and I generally flick between the two, right? I generally deal with the 1 minute 500 period moving average. That gives me a more immediate sense of what the market's doing, and a 15 minutes will give me a better overall trajectory of what this market is doing and or feeling. And as you can see in the past, it's offered a beautiful dynamic resistance level for this current bear cycle. But if you have a look at where we are now, right, we're currently really playing with that level, right? So you can see it's giving us assistance in terms of what we're seeing from a resistance perspective. But again, a break of that 23.6 both represents a break of that 500 period moving angle, as well as a potential move above that 29,700 mark. And again, the 29,700 mark is a significant level, guys. Please don't underestimate how big a break would be should we go past that 6-month low of this market. Reason being two things. First thing you need to understand is that 6-month low that we hit, right? That breakout, that push to the top side was the next stage of the stock market. We did, however, get these interest rate announcements, scared off the market, but this pullback, I simply am treating like a retest. I would have liked the retest to have ended and concluded at the 78.6 to the 88.2. That would have been a decent retest. However, the fact that we went past the 100% mark, meaning past the low of that 6 months, I'm treating, and I have a very, very sneaky suspicion that that was just a bear trap to catch a lot of people, lock them into sell side moves, and essentially cause fear for a lot of people just to keep going south. And that is why, again, a break towards the top side, or at least above that 6-month low, would confirm that suspicion, and then we could start to look for massive long opportunities. But again, markets are in turmoil, anything could happen. And again, we don't have enough data on a globalized and connected economy. If we look at the last big conflict we've had, right? We've had Syria, yes. When I say we, I'm talking about the world. If you look at Iraq, if we look at those types of conflicts, they were very isolated in the sense that, we're dealing with, in that particular case, they were dealing with third world countries that didn't have massive energy exchanges, that didn't have massive SWIFT implications, that didn't have massive global implications. It was kind of something you read about in the newspaper. Where the current conflict we're dealing with is so interconnected, and what you need to understand about it is that China and the East is quickly coming up as the next world superpower, right? And Russia's alignment is currently to the East, right? When US created these sanctions for things like SWIFT transactions, allowing them to make these international banking transactions and essentially locking down all this Russian money, China stepped in and said, hey, no problems, we've got you sorted out. So this conflict from a geopolitical standpoint is unlike anything we've really seen before. And so the data, we can't really go in and say, okay, well, what's happened the past 3-4 times, right? And that's what makes it so unpredictable, and just means when there's potential risk and it's unpredictable, risk management needs to be key, specifically for those of you who are trading much bigger accounts. You want to make sure that you're covered in the event conflict happens and the world doesn't know what to do about that. And there is worst case scenario, and I'm using these words as lightly as I physically can, but with the utmost respect. But if there's a talk, even a stutter or an utter about nuclear warfare, that is something to be very, very concerned about, right? Because overnight, a quarter of the planet could just disappear, right? So we need to understand that. Okay, so enough doom and gloom. Let's carry on looking at the charts in terms of where we're at. But it is a very interesting subject to read up about. So for those of you who are interested, I definitely would advise jump into that and get into that with a little more detail, and stay tuned to the developments. Again, there can be a lot of propaganda, so you want to try and filter out for yourself, what makes sense and what doesn't. So this is the market structure we're going to deal with this afternoon. Again, I'm on a 5-minute time frame. The 500 period SMA is giving us some good dynamic resistance, but ultimately we're looking at that 50 fib. So the initial push has pushed now about a total of 1,000 pips from the New York Stock Exchange open. We could have very well chased that, but again, due to the last 4 or 3 trading days, I'm hesitant to get caught into a range. Most of you know I've got zero problem with chasing a trade, specifically on New York Stock Exchange open, because we can in most cases hold that for 20, 30 minutes, an hour, 2 hours, whatever the case may be. But we're going to continue to watch that. So how I would deal with this if I were you, and let's say we are not live together, I want you then to have a look at this 50 fib level. Let me zoom in one click and make it bigger for those of you who are potentially watching us on mobile devices. I want you to have a look at this 50 fib level because this is going to give us an indication of how we could trade this from a pending order perspective. Right, so I'm referring just to this level over here that is represented by this 500 period moving average. If we have a look here, prices in the past have gone through this fib level by up to, let's just see, about 128 pips or so, right? And in most cases, and in some cases, even as far as 300. So we want to consider that we need to get past, we'll call this support 1. I'm drawing it out there, and I'm going to call this support 2, right? They are generally the same thing. These are the same areas of support. But when we're getting into tighter detail in terms of looking for a pending order setup, then that is where we want to obviously dive a bit deeper and fully identify support 1 versus support 2. Okay, I've lost my trading button. Hello? That is one of the difficulties of having a lot of screens, is that you can misplace a certain little chart or trading button. I don't know where she's gone. She's somewhere around about here. So again, we want to make sure we breach that support 2. As you can see, we haven't gone through it. We've just made a slight pullback. And obviously we want to be cognizant of the fact that, you know, that can still push straight past that level. So we're just going to continue to watch and observe her. I'm just going to make sure I have a backup here in terms of logged into a mobile device. He's almost bought 3 lots of Bitcoin. Okay, so we definitely down and past that support 1. So we're looking at a little bit of I'd say stop loss above market structure here. Again, should this continue to run, I would go ahead and specifically because of the chaos, I would utilize a potential, again, 1,000 point trailing stop. And there we go. Our trailing stop is already in profit. And we can allow that one to do its thing and or run. So yeah, we are at least in a safe zone. Trailing stop is still in profit. So what I'm doing is opening up another position and I'm activating another trailing on that one over there. Let's get it. There we go. So another trailing stop activated. I'll do 1,500 pip trailing on that second trade for the reason being, there we go. So the first one is closed out and that closed out for about 100 pips already. So let's see here if she wants to continue to do her thing. So again, if you're trading on MetaTrader desktop, it's obviously a lot easier to deal with that. Second trade is in over there, and we're obviously watching that push. So stop loss again moved into profit and allowing her to do her thing. Again, I'm using 1,500 points, which is not super big. We're only talking about 150 pips, but ultimately, again, in times where markets aren't doing what you'd want to see them do. Okay, there we go. So trailing stop is pulling nicely. And the profits are rolling in on that trade. So if you're in profit with me on that trade, you can go ahead and just let me know, drop it in the comments. But there we go. That trade is busy running and pushing. And we should have banked in the region of about 500 pips on this trade already, depending how many positions you've taken. So if you've taken 2 or 3 or 4 trades, you can see that in my background, that trade is just pulling its stop loss with us. And if you then are happy and comfortable, your risk is taken care of, you can then adjust your stop loss accordingly. But in this current one, we can see we're running nicely in profit on that. So depending obviously on the lot size that you used, if you used around about a standard lot, then you should have made about $100 already just off of that little quick move there. And it's a nice quick trading session, right? Again, I'm not looking to hold this thing massively with huge risk. Again, just because the markets aren't doing what we normally would see them do or what we would expect them to do. This afternoon is a little bit better in terms of we're getting that straight move that we generally like to see. But in most cases of the past 2-3 trading days, we haven't always seen that. Now, again, a break in structure here doesn't mean that we are going to continue to fall to the ground. We are at the 61.8. We are at that next level. And potentially, markets are giving us a little bit of a hint as to what they may end up doing moving forward, right? So we can see we've pushed down to that 61.8. And I like that from a trade perspective because now we're in a deeper form of resistance / support. However, I would like to, potentially look for a 78.6 type of buy, because that means we are certainly in an impulse, right? That is certainly a long impulse market, and this is the correction, right? So you want to buy the correction. You want to look at when markets have fully corrected down to the 78.6 and the 88.2, and that's when markets correct. And that's the beautiful thing about Fibonacci, and it will be covered in our academy. But when we speak about Fibonacci, we speak about essentially the fingerprint of God encoded into everything in life, right? A certain mathematical formula that doesn't matter where you look, whether you look in nature, whether you look in the universe, whether you look at markets, whether you look at growth of economies, population, civilizations, there's always this 61.8 number that represents and repeats itself in nature, right? Whether it's the male bee species to the female bee species, there needs to be exactly 61.8 male bees to every in a colony for the colony to survive, right? If you look at your hands, if you look at any part of your body, when in relation to another component of your body, each one of your knuckles represents 61.8% of the longer level, right? Your hand to your forearm, your arm in relation to your total body length. Anyway, so it's everywhere. So I look for these deeper levels that represent and give aid and confidence to some sort of long position. I have no qualms in holding a short, just in relation to how markets have been moving. Yesterday, we saw a pretty choppy market. So when markets are choppy, a couple hundred pips, in a quick move, I've got no issues with that. But however, I would like everybody to just watch and observe what we end up getting at that 5:05 mark. Because I think 5:05 could represent a greater break, and it could also represent a greater move towards the downside. Regardless, I think the 5:30 mark is definitely be what we're going to start focusing a lot more, specifically moving into this next week together. And again, should we see that is the pattern, I'm more than happy. The team is more than happy. The whole executive team is more than happy to move the show to accommodate you guys. Because at the end of the day, these broadcasts, these shows are for you and for nobody else. Okay, so nice, quick little successful session there. A couple hundred pips in the bag from a sell perspective. And we're going to wrap that up as our New York Stock Exchange session for this afternoon. But as always, please look at risk management. We're in a very choppy season in terms of global politics, economy. It's just a crazy time to be alive. But again, with those potentially negatives that the rest of the world sees, represents massive opportunity as positives, right? And if you can learn to be involved in the markets and trade successfully in these times, man, you've got it absolutely cut for when seasons resume back to normal. If you've been with us in September, the first 3 weeks of September, every single trading session we entered and exited with a profit, right? And if you can learn to look at these choppy markets and find opportunity as we've done today, then you are well sorted and prepared as a trader to enter 2022 in a way that you've never seen in your life before. 2023, sorry, this is 2022. It has been a very long day, but it's been a good day. Guys, thank you for joining me today. I will see you guys tomorrow morning for the Pounds for Breakfast show. It'll be the final broadcast for the week as we look at welcoming new clients at about 1 o'clock tomorrow afternoon. Now, we'll be extending that welcome to some of you guys that are in our current groups, because we're looking at how do we create a wealth program? How do you plan where it is you are now and where it is that you want to go? What quadrant do you sit at from a prepared and readiness state, right? Do you have enough information? Do you have enough finances? And where are those lacks to get you to the point where you're cash sufficient as well as education sufficient? So you got the backup and the knowledge to bring those two things together, that you're prepared, and when there's opportunity, these two come together to result in success. So I will extend that invite to you guys tomorrow. That is 1 o'clock, and it'll be done via Zoom. And this is going to be more of a personal type of environment where we can look at individual needs and what it's going to take to grow you into that next season that you would like to be, ultimately resulting you exit the recession in a way better position than how we are potentially going to enter it. Okay. Outside of that, guys, as always, the chat has been amazing. Apologies for energy levels. It has been a very, very long day, but I can promise you, you don't want to miss tomorrow morning's session. Next week, we're bringing the heat. Everything you've seen over the past 3 weeks is going to be revamped over the next week, because we have some brand new look and feels that we're extremely excited and we think you're going to absolutely love. If you've liked it up until now, wait for the next gear, the next level. We're going to take it. Guys, as always, remember to learn and do things the Globex 360 way. We'll see you guys all tomorrow morning. Goodbye.